Welcome to Trade Pro. So I've got a highly profitable way to trade with the classic MACD strategy using a two-stage take profit system. So I'm going to go over that two-stage take profit system, then test the whole strategy 100 times in a row so you can see how it performs and how it compares to the other 4 times I tested this strategy, but using a different risk-reward ratio each time. That way you can see why this is the best way to do it to minimize drawdowns and maximize profits. So I'm going to get into the basic strategy. For those of you who haven't heard of the classic MACD strategy, I'm going to explain it really fast and then go over the two-stage take profit and then test 100 times and show results at the very end. Now let's get into it. So we have the 200 period EMA, the MACD indicator, and this is on default settings for TradingView, so 12, 26, and 9. The stop loss indicator here that I'm using is on default settings. I'll show you the indicator itself as well. And just keep in mind that these are not equivalent to just multiplying the ATR by 1.5 and setting the stop loss. This indicator definitely makes different values than if you were to do that, so just keep that in mind. Here is the indicator right here, trailing stop loss multiple of ATR by Blue Phantom. And the basic strategy works as follows. For a short signal, you're looking for price to be under the 200 EMA. Then you're looking for a cross down on the MACD that happens above the zero line of the histogram. So this is a short entry right here. Cross down happens above the zero line of the histogram. Price is under the 200 EMA. For a long signal, you're looking for price to be above the 200 EMA, then you're looking for a cross up that happens below the zero line of the histogram. Okay, so that's the basic strategy I'm testing. And how I'm going to be doing the two-stage take profit system is as follows. So we get the entry right here. Stop loss goes to the stop loss indicator, and then targeting first 1 times risk. Once you have hit 1 times risk, you move the stop loss to break even and target 2 times risk, but only with half your position. You're going to take half your profit once that 1 times risk target is hit. So then you would target 2 times the risk. You've already locked in profits, stops move to break even. But on this example, you can see that it's a range, so price comes back up and stops out that second half of the position, but it's okay because you've already locked in some profit. And the idea of this two-stage take profit is to save you lots of losses in the more choppy ranging periods of the market and to still capture those 2 times risk profit targets in the trending portions of the market. So minimizing the drawdowns in the ranging periods is the point of this. And let me go over a few more examples here, and then I'll get into the 100 test. So another time we get a cross up and it happens below the zero line of the histogram. Price is above the 200 EMA, so that's a long signal right here on this candle. Stop loss to stop loss indicator, first targeting 1 times the risk. And then, because it hits, you can move the stop to break even and target 2 times the risk, having already taken half of your position off at that first profit target. And this one does hit both. I'll find one more here. Okay, here's another. Cross up. Oh wait, no, that one's above. Okay, here's another. This one, cross up from below the zero line. Price is above the 200 EMA, and you're going for the first profit target of 1 times the risk. It hits, and you move the stop to break even, take half your profit off, and target 2 times the risk. All right. So two-stage take profit system, I'll be testing 100 times and let's see how it performs. I think that this is going to do very well. I'll show you the results compared to the other 4 times I've tested this strategy so you can see kind of the differences. Let's get into it. All right, the results are in after the 100 backtest using the two-stage take profit system on the classic MACD strategy, and they were very good. So over here on the left side, I have the main numbers, and on the right, I broke it down into more specifically what the actual trades outcomes were and how I calculated the actual gain on account. So I'll get into that in just a sec, but let's start with the main numbers. So using that two-stage take profit on the 30-minute time frame of euro dollar, which took 6 months of price data to find the 100 signals, there were 62 winners, giving it a 62% win rate, 38 losses. The most lost in a row was 4, and the most won in a row was 7. The gain on the account, assuming a 1% risk per trade, 40%. If you use 2% risk of your account per trade, then you're targeting at 80%, not including fees and spreads. So on the right side, I broke it down a little bit further, showing how if both targets were hit, there were 47 times where that occurred, 15 times where only the first target was hit and then it was stopped out for the rest, and then 38 times where it was an outright loss, not even the first target was hit. So here's the breakdown of how it's calculated. Each time both targets are hit, 47, you gain 1.5% on the account, meaning that 47 both targets being hit times 1.5% on your account, you're gaining 70.5% on your account. The 15 where only the first target is hit and then you get stopped out for the rest of your position, you only gain 0.5% each time this happens. So that's only plus 7.5%. And then 38 times it was an outright loss where you lose 1%, assuming you're risking 1% of your account, minus 38%. So the net gain is 40% gain on the account, assuming that you're risking 1% per trade. Okay, so that's the breakdown. I like this better than using just a normal 1 to 2 risk reward ratio, even though the gain on the account is essentially the same. This is better because the drawdown isn't as much, meaning it's going to be safer to use this if you're going in on a prop firm sort of test. I know a lot of my viewers talk about the prop firm, so I thought this would be interesting for you guys. And then also, it's just nice to not have large drawdowns. It means that you can risk more per trade and not have to worry about large drawdowns. Okay, so you can actually make more money. You can risk more per trade because you never have long losing streaks. Okay, so let's go and pop this up on the spreadsheet, and then I will call it a wraps for testing the different risk reward ratios on the classic MACD strategy. I think I've proven the point about making sure to do your testing. Okay, so do your testing, guys. I'm going to pop it up on the spreadsheet now. Let's check it. All right, here it is on the spreadsheet compared to the 4 other times I've tested this same strategy, but with different risk reward ratios. So it falls in the #1 spot, even though it ties with gain on the account of the 1 to 4 risk reward ratio. It definitely is much better because it has a much smaller drawdown, 28% win rate to 62. There's no comparison when you're looking at the same gain on account. So definitely would recommend, if you're going to be trading with the classic MACD strategy, you should be using a multiple take profit system. It's just simply the best way to do things when you're trading with this strategy. Now, off topic, hopefully I can please everyone with the color of the background in this video. Half the people want a black background for the videos, half of them want the white background for the videos. I just want to do what everyone wants, but I can't because half the people want this, half the people want that. So I just went with gray. Some god in the comment section said, why not just do a gray background if no one agrees? So here it is. The video had a gray background. I hope I can please as many people as possible, or maybe now everyone's going to be mad. Who knows? But anyway, I don't think I'll ever be able to please everyone. The audio quality, I think, sounds a little better in this video, but I still need to download some sort of software to mess with the settings on my mic, and I need to get some acoustic foam to put on the walls in this room because I get kind of an echo in here with there's not really any furniture and it's all wood, so it just is kind of an echoey room. So hopefully the audio is sounding pretty good on this video, but it will improve once I get the acoustic foam going and get things all perfected. But just getting kind of started at learning how to do this videoing and audio stuff. So it's a learning process for me as well, guys. Anyway, I appreciate everyone who stayed through the video this long. Hope you have an awesome night, or at least it's kind of night for me, but I don't know what time it is for you, but have a great day and or night wherever you are and whoever you are. Thank you. Bye-bye.